Welcome to my channel Motivation and Finance. Ready for 2023 financial changes in 2022. When we go back to January, we never expected these many drastic and volatile financial changes can happen before ending December. Inflation being the number one daily concerns, interest rates are still riding high. Never ending high volatility in stock market, big loomies despite the chaos and uncertainties that COVID-19 and political situations brought upon economies worldwide. There are a number of opportunities created by financial technology markets. Number one, payment via digital system is growing. When a bank that only exists in the virtual world offers global payments, contactless, MasterCard with free transaction fees, P2P transfer, and to buy and exchange Ethereum, Bitcoin, and other cryptocurrency. Digital only banks have numerous things going for them. There is no need to spend one moment to visit any brick and mortar bank. Patients are not tested by being in queue and no paperwork to deal with, and they are growing in numbers and revenues all over the world. These are the major reasons visitors to bank branches are said to be dropped 36% from 2017 to 2022. Also, you can reset pins at the comfort of your home, access convenient expense management tools, snap a quick bill payment and quick balance review features, and get real-time analytics when you use digital only challenges. Please don't rush to register into any of these fintech disruptors. Always consider that, like other businesses, they have their own drawbacks. They are prime targets of the financial fraudsters lurking all over this age. Financial fraud is leading the internet crime worldwide. This should weigh heavily on your decisions. In traditional banking, customers can at least force themselves to get out of their homes and storm the nearest bank branch to settle matters. But digital world, only banks might be superbly cheaper and more convenient. But what happens to customers when they run into the problems and can't seem to settle everything online? Here the solution is in partnership with the traditional banks, where the customers can shift to traditional and digital banks at their convenience. How firmly digital only banks fix themselves on the financial market will decide if they are just a passing fad or something that would become an absolute necessity for generations to come. Considering that the digital formation still has to peak, digital only banks have ample time to correct their sales and land squarely on a terraform. Number two, artificial intelligence and machine learning. It is no surprise that with bank revenues exceeding the incomes of nations, that they are the first to embrace artificial intelligence. Now banks are going further by fine-tuning their artificial intelligence solution strategies. This will drive the wider adoptions of artificial intelligence in the sector further. Artificial intelligence and machine learning make organizations more efficient and more effective. These technologies gather, sort and analyze enormous data sets in seconds and are almost error-free. Financial institutions can spend their time acting on these data-driven insights instead of wasting unnecessary time and effort manually digging through the data. Around 2030, artificial intelligence is projected to reduce bank operating costs by 22%. That could mean savings to the $1 trillion ahead. The path to this outlook is not straightforward. However, just like the rest of the global employers, banks are staring at a short supply of professional skills in everything artificial intelligence and machine learning. Artificial intelligence professionals are just the tip of the iceberg in global manpower. With its ability to work with unstructured data, artificial intelligence is well poised to deal with the growing incidence of cybercrimes, financial fraud, threats among them. Artificial intelligence is already a hit with the best customer service software using chatbots and other smart systems. Financial institutions will be no exception, allowing for faster transactions and giving customers the convenience they demand. Number three, blockchain. With low processing fees, fast, truly global in reach, and blockchain remains on the path of totally changing the face of financial transactions worldwide. It has a potential to boost the global economy to $1.76 trillion over the next decade, benefiting the most from the technology. When it comes to the sector that has the highest distribution of blockchain market value, the banking industry rules with a 29.7%, followed by process manufacturing 11.4%, rest is others. The bullish rush by investors to increase the reach of blockchain services is of course easily matched by the ever increasing adopters of blockchain wallets, which now stands at 40 million worldwide. 2025 will be the tipping point when blockchain technologies will be adopted at scale across economies worldwide. Currently, tracking and tracing of products and services is a top priority of many companies as the COVID-19 pandemic ranges on. Other key applications areas includes payments and financial services, contracts and dispute resolutions, and identity. Number 4, cybersecurity is a top priority and identifying financial technology regulations. The financial sector is one of the heavily regulated industries in the world. The entry of blockchain will further earn it if the attentions of the governments all over the world. Countries would be nervous with a spat of headline grabbing financial breaches, while blockchain investors will complain about regulations not created for them in the first place. No one would deny that security is a prime concern, no matter the type of financial services. In the age of digital banking, one topic that regulators would scrutinize closely is the question of data ownership. Nations will address this question at their own pace. Cybersecurity breaches are particularly damaging for financial institutions. Their customers' financially and personally identifiable information are incredibly valuable for hackers, and security breaches may well result in the bank losing a huge quantity of customers as well as revenues. Hence, the financial institution must prioritize cybersecurity in 2023 and beyond. They must not only optimize their own internal processes, but they must also be selective about working with third parties that put data security at the heart of every ideal outcome is a set of national standards comprehensive enough to calm the nerves of businesses and customers. Number 5, innovations in payments. Payment innovations in fintech have multiple components. These are mobile payments, contactless payments, mobile wallets, smart speaker systems, identity verification technologies, artificial intelligence, and machine learning for security. Based on figures from 2020, the biggest trend in payment innovation is the rise of mobile payments, especially during the COVID-19 pandemics when more transactions shifted online. But it's not just online purchasing that is covered by mobile payments. In-store transactions are also projected to rise to more than 2.7 billion by 2022, which will push the global e-commerce transaction value to over $5.4 trillion by 2025. Thank you.